Hey friends, welcome to the video. So today I'm gonna explain what are the payroll entries. So what are the entries to be made from salary paid and ESI payment, PF Provident Fund payment, and how these entries are framed and what are the criteria to be considered while making such entries. Okay, so let's start the presentation. So basically payroll entries are related to employees, right? So employees can be categorized into two or three categories, like wages. Employees take wages in daily basis, employees can take wages in weekly basis, or the salaried people will take their salary at the end of the month. Okay, so in this presentation I have made an example of an employee who got salary at the end of the month. Now we will check what are the entries we need to consider while doing the payroll entries. Okay, first one is salary paid, basic. I hope you guys know what is a basic salary entry. So I will just I will just brief this basic entry so that we will get a clear clarification in the later stages of it. Okay, salary due entry is there. Next one, salary due with many expenses head. The many expenses head means when we check the profit and loss account, we can see a salary or a basic pay, HRA head, or mess allowance. Likewise, we can split it out. We can sketch these things from the profit and loss account, right? How we can form the entry in those cases. Okay, then deduction from salary, mess allowance. Okay, the deduction from salary, what I'm trying to say is like, the employer will provide perquisite to the employees. Okay, the employer will charge a certain amount from the employees for the prerequisite. In such cases, what might be the entry? The next one, PF ESI entries, employees contributions. Okay, so employees contribution might be the deductions from employees salary. So employee contributes such a percentage of his earnings towards the PF and ESI. And I hope you know PF and ESI, right? Those are a fund created by the government for the welfare of the people. PF and ESI employer contribution. So basically in PF and ESI we have two contributors, employer and the employee. PF and ESI are computed as basis of salary. A certain percentage of salary shall be kept aside for PF and ESI. These percentage shall be taken from employer's contribution as well as employee contribution. Next one, salary paid to employees. So basically the second point and seventh point are the salary due entry and the salary payment entry. Okay, that salary due entry shall be paid to the employees in the seventh entry. Next one, PF payment to PF department and ESI department. So we'll go for the first entry, salary due and paid. The simple general entry, salary account debtor to bank. These are the scenario when the firm is a proprietorship or a small company on which there is no ESI or PF registration or no other further compliance is required. Okay, in such cases, salary account debtor to cash. Salary is, as you all know, that salary is an expense account, and when increase of expenses, we will debit, right, as per nominal rule, debit all expenses and losses, credit all incomes and gain. And in terms of cash or bank, cash is a real account, bank is a personal account. So whatever the case may be, it should be credited, right? The asset decreases, right? Okay, so being salary paid to employees. Okay. Now we will go for the salary due entry. Salary due entry will be salary account debtor to salary payable, 1 lakh each. Okay, salary is an expense account and salary payable is a current liability account. And we know that all liability account have credit balance, right? By crediting the salary payable account, the liabilities increases, right? Yes. So next, the innovation being salary paid to employees. The salary due entry. Salary due entry with the different heads. As I have mentioned earlier, we can split or segregate some of the expenses from profit and loss account, right? Okay, in such cases, the entry will be basic pay account 1 lakh, HRA account 50,000, and salary payable the total of 1,50,000. This entry we can fetch these transactions like basic pay from profit and loss account as 1 lakh and HRA account 50,000. Next one, deduction from salary. So this is an entry when as an employer give perquisite to the employee and they recover a certain percentage amount from employee when they pay salary. Imagine amount of perquisite which is charged by the employer to employee is rupees 3,000. Entry will be salary payable account debtor to mess allowance. So here we can see that the salary payable is a liability account, but here the salary payable is debited, right? The credit balance of the salary payable reduces, right, when it debits. The amount of rupees 3,000 will be debited by salary payable. Mess allowance. You can treat mess allowance in two cases. Number one, you can treat mess allowance as an expense. Number two, you can treat mess allowance as an income while we charge from employees. So when we treat mess allowance as an expense, see, the company bear further expenditure as mess allowance, like hiring a person in canteen or buying raw materials, etc. Right? Such amount will be debited on mess allowance account. In this entry, we credited mess allowance. In the mess allowance account, amount of rupees 3,000 will be adjusted with the other amount. I hope you got clear. Next one, if the employer treat it as an income account, in such scenarios we know of the nominal account, debit, credit all incomes and gains, right? Debit all expenses and losses, credit all incomes and gains. In such a way we will credit the mess allowance account, being mess allowance deducted from salary. Now the fifth transaction, deductions from salary, PF and ESI, which is an employee contribution. So in terms of employee contribution, we can see that the entry will be salary payable account 10,000 to PF payable account and ESI payable account. You can see that salary payable is a liability account, right? When we debit the salary payable, amount of rupees 10,000 will be deducted from salary payable, right? Because salary payable has a debit balance and it is a current liability. When we debit the salary payable, the amount of rupees 10,000 will be deducted, right? Then the other account is PF payable and ESI payable. So PF payable and ESI payable is a current liability account, right? Yes. To increase the current liability account, we need to credit salary payable account debtor 10,000 to PF payable 4,000 to ESI payable 6,000. Okay. We'll go for the further entry, PF ESI employer contribution. In case of employer contribution, we can see the entry as Provident Fund account debtor, ESI account debtor. So Provident Fund 4,000, ESI Employee State Insurance account 6,000 debtor to PF payable account to ESI payable account 4,000, 6,000. In this entry, we can find that Provident Fund account and ESI fund, that is Employee State Insurance account, both these accounts are when we comes to the golden rules of accounting, we know that expenses are what we need to do, debit all expenses and losses, right? Yes. So in such scenarios we should debit the expenses. These are the expenses incurred for the employer. This head will be appearing in the profit and loss account as an expense. To ESI payable and PF payable, these are the current liabilities and it should be increased, right? Yes. These. Now we will go for the payment entry. Employee shall be paid as salary at the end of the month. So the entry will be salary payable account debtor to cash or bank. I have given a short computation of how this amount has been occurred. Okay, so in this computation I haven't considered first point and third point. First point is a single due entry and third point is, so those two entries I haven't considered those two entries. Okay, So you can see that the salary is 1 lakh, and then we deduct 3000 as mess allowance, which is charged by the company as a perquisite, less PF contribution by employee and EF contribution by employee, ESI contribution by employee. Final amount will be 88,000, which shall be paid to the employees at last. Okay. Now we'll check with PF and ESI payment to that department, or PF department or ESI department. The journal entry will be PF account payable, ESI account payable to bank and cash. So the amount will be 8,000 and 12,000. The total amount will be 20,000. PF payable account and ESI payable account, both those are, you know, both those are current liability account, right? So these current account liabilities shall be debited, so that the current account liability will be nil. In the cash account is a real account, right? PF and ESI amount paid to the respective department. So the computation of PF and ESI on which the first transaction and their transaction is not considered. Okay. So the amount which shall be paid to the respective department of PF and ESI will be employer contribution 4,000 and employee contribution 4,000. The total amount will be 8,000. Then ESI contribution of employer 6,000, and ESI contribution of employee 6,000, and the total 12,000. Right? Okay. Now I am giving a brief clarification regarding the account, name of the account, the category, how it is debited and credited, when it is increased and decreased. So salary account is an expense account, increases debit, decreases credit. Salary payable is a liability account, when it is increases credit, decreases debit. Now PF or ESI account, which comes under the category of expense, increases debit, decreases credit. Then PF and ESI payable account is a liability account, increases credit, decreases debit. So I hope you guys had got a clear and complete clarification regarding same. So if you want to see the further videos, please check on the link in the description. Thank you.